In this video, we're going to be going through the area of Mackay in far north Queensland and a little bit around some of the leading indicators, and then we'll go through a cash flow case study at the end. Before we get into it, my advice disclaimer: this is presented for general informational purposes only. Any financial, legal, tax advice that you require, I strongly suggest you speak to a financial, legal, or tax professional. Please do not take anything in this video as literal. Do your own research. This is purely factual and contextual information as well. So a little bit around the asking prices in Mackay. You can see from the beginning of 2022, property prices have escalated somewhat with a sharp incline towards the end of 2024 there. Most notably in the Andergrove area, Andergrove and Beaconsfield areas, you can see there that we've had price growth over the last 12 months of 10 to 15%. In terms of rental change, you can see the majority of rental growth has occurred in the northern suburbs, northern beaches, and central Mackay area. And in terms of vacancy rates, we have fairly low vacancy rates, which has been declining pretty much since the end of 2017. And you can see since the middle of COVID, we've had ultra low vacancy rates there. Overall, property listings are getting shorter and shorter. Since the end of 2016, you can see there's a bit of a sharp decline, some plateau up until 2022, and then we have another decline till the end of 2025 where we are now. So literally there have never been fewer properties since 2011. I'm not too sure how reliable this data is over here. However, in addition, rental growth has been fairly consistent since the beginning of 2018. You can see, particularly for houses, that rental growth has gone from around about $300 to $350 all the way up to $700, $650 for a 3-bedroom home. So you can see there that there has been significant rental growth over a 7-8 year period. In terms of the overall number of rental listings, it's been fairly sparse ever since probably 2021 here. There was a bit of a COVID period there where there was relatively nothing on the market. And now you can see that picked up towards the end of COVID, but the trend overall has been of a decline since then. You can see towards the end of 2017, there was a sharp decline here, and then in the middle of COVID, there was nothing to replenish that. This is a bit of a case study that we have for a property in Andergrove, which is just north of North Mackay. This property sold for $706,000 in October 2025. Stamp duty is roughly $30,000 on something like this. You'll need total upfront costs of about $171,000, which is your 20% deposit and your stamp duty. It doesn't take into account solicitors' fees, building and pest inspection, apportioning of any other fees as well. So take that into account. It's rent appraised at about $700 per week, which means that you'll gross about 5.2%. And then interest-only loan repayments based on 80% is going to be just under $2,600 per month at a 5.5% interest rate. In this area, council rates are fairly expensive. You're looking at about $3,800. Water rates, or for water rather, you're looking anywhere up to about $500. And then for your home building insurance, you're looking at $2,500 per annum. Your property management costs will vary. You'll get anything from 7 to 8% plus GST. You're looking at roughly $62 per week. So something like this is going to set you back on a weekly and annual basis of $144 per week and $7,500 per annum. So thank you everybody for watching. If you do have any questions, please don't hesitate to reach out. I'd love to be able to answer any questions that you have on investing in Mackay. If you do have any questions, please don't hesitate to shoot them through. Otherwise, if you want to know more about investing in property, hit the link in the description and you'll be able to book a complimentary consultation of which we can go through your own personal investment property goals. Thanks again. Speak to you soon.